If you're watching this video, you're probably trying to work out if you can make money investing in the uranium space. And you'll also have noted there are lots of different business models around. We talked today to Roger Lemaitre. He's the CEO of UEX Corporation, an Athabasca-based explorer. We talked to him about their strategy and what they're doing to stand out from the crowd. We talked about directors' remuneration, also their nickel and cobalt assets, which they've got in the portfolio, and how they hope to monetize those. Those and other topics can be found in the description below. Click on the relevant timestamp. That'll take you to that part of the video. And if I could also ask that you click the button in the corner of the screen to subscribe to our YouTube channel. And if you want to be kept up to date with videos like this, please click the notification bell. Let's hear what Roger had to say. Hello, Roger. How are you?
I'm doing great.
So you're in London for the WNA.
We are around the WNA and a little bit of the WNA and meetings around it as well.
Right. And what are you hoping to get from it?
We're just hoping, honestly, for our shareholders to get a little more exposure to what we're doing in the uranium and cobalt sectors,
right,
outside of the Canadian market, because uranium interest is starting to pick up again.
Right, and have you got shareholders over here in Europe, or
we do have a few shareholders here in Europe, but we're dominantly Canadian and American shareholder base.
Right. What's the general mood, do you think? I mean, it's only Wednesday, right? But what's the general mood? Have you kind of picked anything up?
General optimism. People, I think, are starting to sniff value at the bottom of the uranium cycle, and over the last few years, there's been a whole lot of hype, and it reminds me of so much of 2004 when I was in the uranium space 20 years ago.
Yeah.
People have heard it's coming, it's coming, it's coming. They get tired of hearing it coming, and now I think people are starting to believe it might be coming.
Right.
So we're just trying to tell people what we're doing, so that when that comes, they're ready to know who we are.
Yeah, a lot of people talking about the macro story and nothing but to the detriment of telling their own story. But no one's quite sure of when it's coming. So I think we'll leave it to people a bit smarter than me.
Fair enough.
Let's talk about your project. Can you give us a minute summary, and then we'll get stuck into some questions?
Sure. UEX is one of the older junior companies out there. I think we were formed in 2001, and we're probably one of the third or fourth oldest junior company in the world. Mm-hmm. We have 21 projects, 18 in uranium, 3 in cobalt, but we have sort of 4 flagship projects, which is a lot for a junior company.
Yeah.
And our goal really is, we have 2 projects that are on the wings waiting for development that, under today's uranium prices, even in being hosted in the Athabasca Basin, all our projects, just won't move ahead, unlike any other company that's in the Athabasca Basin. So our goal short term is to build the pie, as much resources we have in our portfolio when that time comes. And then when that time does come, we'll be able to move those other 2 projects towards construction. Okay, so
you're a kind of interesting story to me, because you've got a lot going. You picked the tough commodities, uranium and cobalt, right? And obviously cobalt's coming back up a bit. There's a nickel component to that, and then there's the uranium stuff. So can we just talk about what your thinking is and what you're trying to build out here? Because there's a lot of moving parts. You can't fund them all.
Not true.
And there's a lot of resource required to actually get those things moving. So let's talk about what you're trying to build first. So talk to me about the management plan.
We're definitely a uranium company.
Right.
Okay. So first and foremost is moving uranium to our 2 core uranium projects forward. But because they're at the study phase and ready to move forward from that, in the current market, it's not feasible, nor does it make sense to try to build something that's not ready for the market, or the market's not ready for. Meanwhile, on our uranium projects, we had a cobalt prospect, and we realized in late 2017 that it was a pretty significant cobalt prospect by world standards outside of the DRC. And so the plan has always been to get shareholder value for those cobalt assets that are non-core to the company.
Right.
And eventually move them out somehow. And there's multiple ways we can do it. And last year we were looking at a spinout. And unfortunately that timing for the spinout, by the time we did the work we did, hit the downswing of the market. So while I have some shareholders that are very unhappy that we didn't do the spinout, it makes no sense to do something with those cobalt assets until
that's
value.
Off the table?
No, we did lots of work on the cobalt this year, but on I would say more of a temporary basis. We were defining a deposit, so we put some resources into that this year. Our plan is still to create value for those assets for our shareholders.
So I just want to be clear, because like you say, there's a lot of kind of discourse in the marketplace. What happened? We were promised this. The timing of the cobalt price wasn't with you when you were thinking of doing that.
It actually imploded all in the same 1 week period.
There we go. And your job, apart from mitigating risk across the organization, is to maximize value, all of these lovely cliches. But what does that mean for shareholders? You're saying we decided not to do that project, to spin that out because it would have been the wrong thing for shareholders.
Absolutely, and I think the only reason to do a spin out is that the spin out creates more value than having it inside the company in the short term. And when we were ready to do the spin out, got our 43-101 report together from a virtual program that we started only in January. By the beginning of June, we were ready to start the spin out with a resource. The market price cratered.
Yeah.
And then being in Canada and Toronto focused in terms of the markets, there was a financing done in Toronto in the cobalt space that did not go really well. Not our financing, was another company, and it became that commodity became a 4-letter word in Toronto for a period of time. So we could have done it, no matter what, and forced it to happen. But I think there was a strong risk that we would have orphaned the cobalt assets or imperiled the uranium company. And at that time, we said, okay, we'll put it off temporarily, and we'll see when the market demands value for that cobalt.
But do you know what you've got with that?
Yes, we do. Yes, we do.
You know exactly what you've got. So what data do you have?
So we've done about just a little under $5 million worth of work over the last 2 winters on the West Bear Cobalt Nickel project, and we've defined resources over a strike length of 650 meters, pitable starting at 30 meters depth, going down to about 100 meters depth. We fully defined it, and we're in the process of putting together a final resource on that. We did an interim resource on it last year. While it was not big enough to be moved forward last year, the deposit was open-ended in all directions. I think we've defined the limits of this particular single deposit at this point in time. And now we're ready to start moving forward.
So your 60 million market cap, how much do you think of that is attributable to cobalt and nickel?
I would say probably about 20%. But that's
20%.
But if you asked any investor, they'd have a very different view on that. Some would say higher, some would say lower. So I'm going to say about 20%.
So it's not worth a whole bunch of money right now.
No.
So what are you going to do?
Right now, I think it comes down to whether investors want to be into cobalt. And when we look at the assets, if it's going to be spun out or find a partner, it has to create, I know it's a buzzword, it has to create value. So the last thing we do, say we went the spin out route and spun it out, how does it financed? Is it financeable? The question would be,
what's your liability?
Well, absolutely. And so you're sitting here going, well, maybe we can spin it out and maybe we can raise 6 months worth of money to keep it floating. What happens in 6 months? Is it orphaned? And then there's no value to that property to a current UEX shareholder.
So what's happening? You're going to do nothing with it this year?
We are still looking to move forward. I think the market in cobalt is changing as we watch it every day, and in the moment the time is right, we make a pull. But we have been contacting people other people, not just the spin out route, to see where the value is. So we're very active on it, but it is very quiet because negotiations and discussions and talking with bankers isn't something you put in the public domain.
But there are conversations going on, and you are evaluating
Absolutely.
it. Just you can give no sense of timing yet.
Not yet, but our goal has always been to do it as soon as it's feasible. In our opinion, feasible from the board point of view.
Right. Okay.
But in the Canadian market, in the North American market for cobalt particularly, we're seeing a lot of M&A activity right now, a lot more interest. And what I see particularly happening over the last year is a change in the way that cobalt sort of future is valued by investors. There was a lot of rumors out there about cobalt not being used in EV batteries, which is driving all the interest in the last little while. And it's going to be engineered out, and I think we've seen that that's not the case, and it's not going to be the case anytime soon. And then we're seeing we're taking a global market and turning it into a regional market. You see, here in Europe, the people are really busy trying to build regional gigafactories. We're seeing the same in North America. We're seeing, of course, China dominates things now, and everyone's starting to get into this sort of, I think, what Benchmark Minerals calls the EV arms race. And so there's definite interest in seeing cobalt projects that aren't DRC based and struggle to have those challenges with sourcing out of the DRC.
Yeah, it's a much told story, but like you say, making it happen is another matter.
Absolutely.
So you're parking that for now. How much money have you spent on it in total? I know.
In total, in the last 2 years, just a little under $5 million.
So it's just that.
We've drilled about 175 drill holes.
Sure.
So we've done a lot of work for a little bit of money.
Right. Okay. So you'd want to recoup at least that.
I think it's fair for shareholders one way or the other.
Right.
And the form may differ. It could be cash up front if it was a bought outright sale. It could be, our company was founded on a dividend out of shareholders through a spinout.
Right.
The shareholders of the parent company received our shares in exchange, and that, we would look at that as well.
So it's very early stage. You've got to recoup your capital. So are you viewing it as a distraction?
I think for some shareholders, yes, and for others, not. And I think that's one of the key reasons why our company feels that eventually they have to be going in they have to be separated from each other somehow.
Right, okay. Let's leave that.
Yeah.
I think that one's sit back and wait and see. You're not sure on timing, and you'll let us know when you know, right?
The market will actually probably let you know more than anything else, to be honest.
We'll see. So let's talk about uranium, because that's why I'm here. WNA is happening this week, as we said. You're meeting a bunch of people, shareholders, funds, trying to get everyone G'd up and get a sense of what's going on. Okay, so 20% of your 60 million market cap is cobalt and nickel. There's 48 million, just under 50 million bucks, which is, you think this company's worth based on its uranium play. There's a lot going on with the uranium assets. You've got a lot of assets. You're a small company. How much cash have you got?
We have just a little under $5 million Canadian right now.
Right. And again, back to the strategy, back to what you're thinking. You're going to spend $5 million bucks to do what? What's the first thing on the list?
So the first thing on the list is grow the uranium resources in our inventory.
Right, so that's your strategy, grow the resource.
That's correct.
Okay.
Now we do have two projects, our Shea Creek project and the Horseshoe Raven project, where we have resources. We have PEA level type studies on them that are ready to move forward in the next stage. We know that, in the example of our Horseshoe Raven project, it's going to take $48 uranium to be Canadian dollars to break even. So we could sit there and try to pretend to match this project forward, but the market's not ready for it, and nor is the signal there that we're going to see that price imminently in the next few weeks.
So that's essentially, so it's 48 bucks to break even.
Which is pretty comparable to what you see in Athabasca projects.
Yeah, people are talking 50, 55, 60, 60,
And that's a Horseshoe Raven. And then our Shea Creek project is on the west side. It's the first of those west side discoveries done back in the mid-2000s, and when we were the market darlings of the uranium world back then. And our partner is Orano. And Orano's been going through their challenges, and that project's been put on their shelf short-term while they reorganize their operations.
Right. So how do you prioritize what you're going to do? You got a project. You got to wait till price discovery happens and it starts moving. Utilities start buying, doing contracts, and it's going to get to 48 bucks. That's a break-even level for you, right?
So you need a little higher to be incentivized. Yes.
Right. Okay. That's what I'm saying. So I said we wouldn't talk macro. Now I'm going to talk macro. So what's your company's view on the timing of this? Are you sitting back and dependent on what's going on in the marketplace, or what level of control have you got about how you move forward?
Okay, so on the Horseshoe and Raven project, we have complete control about how we move forward on that. It's 100% our project, and we can move that as we see fit. We have been doing little things with that project over the last couple of years, doing some heap leach studies to change the processing methodology, and that's going along and continuing to move along, but at a pretty slow pace because we're not spending huge dollars on it. We don't feel it's appropriate to dilute shareholders to spend tens of millions of dollars on a project at this point in time in the market. So yes, when we see momentum in that direction, we'll start to move on that project. It's a relatively simple project in the uranium space in that part of the world because of its location, its grade, and the fact that we literally have infrastructure crossing over the deposits, power, road, etc. So it's a relatively easier project to move forward than some of the other ones. We don't have water issues. It's conventional mining. So we think, well, there's no such thing as fast tracking in uranium space. It's one of the ones that can move quicker.
So when you say move quicker, if you got to press the button, how much money would you need? How quick would you get into production, and how quick would you be able to get into the market?
Our PEA from a few years ago shows that it's about $225 million to get to the finish line.
Right, so it sounds like you've got to do some more studies, some more economic studies above the PEA.
Correct.
To totally understand that and optimize it. So what's the timing?
You're probably looking in the 7-year window to
7-year window.
7 to 10 years.
Okay, so you know where you fit in the cycle, as it were. So as soon as the cycle moves, you know where you are and how you win. Right. Okay. That's project number one.
Shea Creek, that one's unfortunately in control of our majority shareholder at Urano.
Right.
And I think that will be part of what happens on the west side, but we're not in control of that. And we'll participate as best we can, encourage our partner to do more. We don't feel that the deposit has been fully defined. In fact, we're pretty comfortable that it's not even close to being fully defined. And we're going to be pushing them to make that bigger in the meantime to incentivize something to happen in that part.
So what are they doing at the moment? And what's the relationship, financial relationship?
Well, we're joint venture partners,
right?
And so they're also the operator. So they get to pick and choose when projects get done, and because they own majority, they have the ability to say yay or nay to projects.
What are you obligated to do financially?
We don't have to do anything we don't want to. So we can dilute on any project we so desire.
Right.
We have 8 joint venture projects with them. With Shea Creek is by far the most important one.
Right.
And we can decide whether to dilute on each individual one. And at Shea Creek, we'd like them to propose some more programs. They've been idle for a couple of years, so we haven't had to make any decisions on that.
So the trouble with partnering with big companies is they've got lots of options all around the world and lots of different priorities to you.
Correct.
Right?
Yeah.
So you can try and push Asano, but they aren't necessarily going to move to your drumbeat. They're going to follow their own strategy. So this is a project which I think, would you say you're slightly out of control of, or what are your options? When you say we've got options, what can you do?
What I think we can do is I always like to put ourselves in the other person's shoes and say, what do they have for options wise? When you look around the world at what they have, this is actually one of their better projects.
Okay.
And I think, quite frankly, they just need to be reminded about the potential, above and beyond what they already have. And I think that's one of the things we can do to help them out and help them move the story.
And why do you say it's one of their better projects?
Because of its location.
Right.
2, the fact that there's going to be infrastructure built up in that part of the world from some of the other companies that have success in that area.
Right.
When you look at what they have around the rest of the world, some of their stuff is in more difficult terrains and probably at higher cost, to be very honest, than what they could do here. And their other good project in a similar jurisdiction, they just put on the back burner. So
there's a kind of jurisdiction, get it, infrastructure, get it, and there's some more isolated projects which they may have, and the cost of getting that to a port, let alone out of the ground, is prohibitive. But so what do you know about this in terms of grades, in terms of what you've got apart from neurology?
At Shea Creek? Oh no, we have almost £100 million deposit there, at a little over 1.3%, which is about average for the Athabasca Basin, or a little bit above average.
Right.
It's located 22 kilometers south of their former Clough Lake operating mine that they ran themselves, so they're familiar with the neighborhood.
Right.
We have a road going right over it. It's a classic unconformity deposit with basement roots, similar to what was mined at Key Lake back in the 1980s. Okay. So technically this isn't as much of a challenge. It's a little deeper than some of the Athabasca projects, and that's probably the biggest challenge.
Good margins? What do you need to get?
What? Sorry?
What is it? $48 for the other project?
I would think it's probably a little bit north of that, closer to the 50-55 range.
Right.
But that,
who knows?
That's who knows. Yeah.
Right. Okay. And then what's the next project?
So the next project on our list is Christie Lake.
Right.
And Christie Lake is immediately on strike north of McArthur River, 9 kilometers away. It's on the structure that hosts every pound at McArthur River crosses onto our property, and there's 3 known deposits there to date. We're the only junior that has land package between the 2 world's largest highest grade mines, Cigar and McArthur. And we have, in 2017 we made a discovery there that grew the resource that we had there at Christie Lake. And we picked this up on an option. We vested our option now to say we own 60% of the property, and our partner is JCU Canada, the Japanese private company that's actually one of the bigger players in the Canadian uranium industry that nobody knows about. Right. They own chunks of several deposits and are joint venture partners with all the big players, Cameco, Denison, and Urano, as well as us.
So I'm interested in all of this. You've got a lot of moving parts there, and some of it you're in control of, some of it you're not. You can spend some money building out resource. You've got partners who are not necessarily playing ball. How do you reassess, or how do you assess your current strategy, and how often do you reassess that in terms of what's going on in the market with price, whether JV partners want to do something or not, whether you've got this partnership with Asano, but you say you've got options there to dilute. Is that something you consider doing sooner rather than later? Or do you think you're going to hang
hard to dilute on resources when our goal is to grow the number of pounds we have.
But there's got to be other projects which
yes, we are, and we have been on some of our grassroots projects.
Right.
So of our large number of projects we have, of about 14 or 15 of those grassroots projects, we're not working on. We actually vended one out a couple of years ago, and my goal would be to see more of that portfolio working for us, but not necessarily using our resources, so finding partnerships. One of the advantages that we have over everybody else in the basin is that we were there in 2001, before the last run-up. And so we have a monstrous land package, and there are companies that have monstrous land packages. The difference is where our land packages are located. In the prime areas in the western basin and in the eastern part of the basin around the infrastructure that, and quite frankly, we're sitting on projects that, there's one project we have called Rio Lake. We have 3 mineralized drill holes on it. I've never followed it up because it's not the priority in our portfolio. So the things that we have in the wings would be flagship projects for other juniors of similar or smaller size to us. And when the market does turn, we'll engage them to take on some of these projects for us and mitigate. And then my view is it's better to have 50% of something than 100% of nothing.
Well, this comes back to this strategy. What are you thinking? How are you having to change and adapt to market conditions? Just sitting on a large land package is
it's no value.
Great, it's like a liability, quite frankly, right? It's a cost, right? But how do you monetize it?
So monetizing it with, we did a deal with a company called ALX to have them work some of the property and work it forward. And so they're spending their money to decide whether we want to be involved in that project or not. We have a handful of those other projects that we want to do exactly the same thing with that are not our core projects. On the core projects, the core 3-4 projects, we have 2 that we can't move forward now because they're ready to move forward. So the idea is to make those other ones move forward.
Right.
Grow the pounds and then move the most appropriate projects forward when the market does change. We can't control the macros, but we can control discovery. And what's clear in the uranium industry over the last 5-6 years is that even in tough markets, a good discovery in the basin creates great value for shareholders. And so that's our goal, create the next discovery in advance of being able to move our project forward.
So you've got some institutional shareholders in there?
We have a few. Cameco are still our largest shareholder. They're one of our founding shareholders when we first started the company. They contributed a whole bunch of the land packages. Our Hidden Bay and West Bear, Horseshoe Raven projects were their projects at one point in time. They contributed them. And then we had a junior company called Pioneer Metals contribute cash and the rest in the management team that founded the company back in 2001, 2002.
So they got their own problems right now?
The Cameco does, yes.
Yeah. So are they picking up the phone to you and going, what are you doing? Or are they just focused on themselves? I mean,
I think if you asked anybody in the industry right now, Cameco is completely focused on themselves and rightfully so. They used to have a right to participate in our financings, and when things got really tough for them, they had to make a choice between theirs or ours, and they of course chose theirs because that made the most sense for them to do so. They have a fantastic land package because they've been around the longest, and that made a lot of sense for them. We do keep tabs with them. We do talk with them regularly, so they know what we're up to, and they're very happy with what we're doing. So they tell us anyway.
Right. Okay. You're still taking their calls. That's good.
I think more as much as they're taking my calls as well.
Okay. So, but you've got $5 million left. Based on what you've told us you're going to do, when does that run out?
We can be financed through to the end of next year without much trouble. What the level of activity in next year will be dependent upon what we decide to do, and I think that we'd like to be a little bit active at least, but we're not going to go out there and try to do something crazy to dilute shareholders at the current
So what you're saying to shareholders, I need to be a bit fluid because the market is a bit volatile at the moment, or flat at the moment, and we need to keep our options open. But at some point, you're going to need to go back to market, right?
Absolutely, yeah.
Okay, you don't have a whole bunch of shares out.
381 million shares, give or take a few 100,000,
Seen worse.
Yep.
Seen worse.
Not bad for a company that's been around since 2001.
True. If you do, I mean, again, it does come back to what your plans are for next year, you know, and how much you're going to raise. That's a finger in the air time, I guess.
The key reason we don't know about what we want to raise is it really comes down to what we do with the Cobalt assets, and our goal is to get that out.
But you're not expecting any money in from that, are you?
Hard to say.
Stage it's at? I mean,
hard to say. It's one of the only 2, or actually one of the only 4 in North America projects with a resource to date.
Sure.
So it's unique. Its jurisdiction is unique. And yes, it's still early stage, but I think what we're trying to do with the cobalt thing is also tell people what cobalt deposits in the Athabasca Basin are unknown. It's a new style deposit no one's ever seen before. Despite the fact that cobalt and nickel are commonly associated with several deposits in the basin, what we're finding are nickel cobalt deposits that aren't associated with uranium. And that's not been looked for, despite the long history of exploration there, and despite the fact that several people have probably drilled a hole into one of these things and not realized it because they didn't sample it correctly. So what we have is a little bit of a knowledge, and we're willing to sell that along with whatever that process is, because we think we can turn the Athabasca into not only it's our existing global world-class uranium district, but it could be a significant cobalt district as well.
Well, potentially,
yes, but it's early stage.
It's
very early days.
It's very early days. People are going to work out if they can mine it economically, and say what the economics look like, what the metallurgy looks like, and indeed if it's worth doing. But again, you're not in control there in the sense that you're in the asset, but in terms of any negotiations, if you're going to just do it for cash, it's not going to be a whole bunch of cash. If you sit and go along for the ride with them, it's going to be a while before they're into the money. So you can't rely on that as a contributing factor for your uranium.
No,
assets,
correct.
Right?
It could be. I wouldn't count on it, and I would agree with you there. That to count on it would be silly.
Yeah. So with uranium, your number one priority
is Christie Lake.
Christie Lake. And how much money would you need to raise, and how much would you raise? Or are you going to say that's dependent on what the price gets to? Because you've got to start somewhere.
We're in the process of just doing a $2 million program right now.
Right.
And we look into 2020. I'd say we look to do somewhere between $2 and $3 million on our portfolio of assets.
Okay.
We will do an extremely small amount of somewhere around $400,000 on the cobalt angle, because we believe that we have the next prospect right on our property. But it's small, shallow, it's an easy player to get into with really short drill holes.
Right.
And so we'll put a little bit of money into that if we need to, and then the bulk of it will go into doing work at Christie Lake.
Okay.
We do have coming up this probably in November. Yeah, we're going to do an extremely small drill program of about 2,000 meters right next door to the McLean Lake mine. We border up to the Sui deposit. In fact, the boundary of the pit is within meters of the property boundary.
Right.
And we've come up with a concept. While we've looked down the trend and not found anything, we're looking at a concept that our exploration team, including myself, were involved with discovering mineralization at the Eagle Point mine. They included that extension at Eagle Point that they did back in the mid-2000s for a cross-linking feature to actually right across the property boundary. We've done some work to test up that theory, and now we're going to drill some holes in there. So we're one of the few junior companies that can look at true brownfield-style exploration right next door. And we'll do a little bit of work on that, but what we're trying to do is maximize every dollar we have in the ground.
I get that. That's coming across loud and clear. I think what you said is smart, intelligent in terms of the planning. I think you watch the cents and the dollars, and you're a low G&A. We've looked at your numbers; it looks good. Your shareholders, though, right? So they're waiting for great things. They always do, and they're all in or they're not. What would you say to them in terms of how this thing grows? I mean, price will bring some sort of bump and return here, but how are you affecting share price? How can you affect share price? Can you?
Oh, absolutely. We've seen it with some of our peer companies with the no discovery. So the trick is, what land do you have? Is it really prospective? And are you looking for pure grassroots stuff, or are you looking for stuff what I like to call mid-stage exploration projects? So at Christie Lake, for example, this year we're following up old PNC, which was the previous operator back in the 1990s, or in the late 1990s and 1980s, where they hit mineralization and didn't follow it up. Right. So what we're not doing is saying, okay, here's a chunk of moose pasture, let's go drill some holes and see if we're lucky. Right. What we're doing is saying, here's a target that hasn't been tested up dip or down dip, depending on whether we're looking for classic unconformity or basic mineralization, saying, is this the right place to be looking up and down dip of? Or, hey, on our Christie Lake project, we had that discovery at Aurora on the north end of the 3 deposits. And then suddenly the trend dies, and we're going, well, how did it die? This is kind of unusual because of our experience. Our team has extensive experience in the Athabasca. We haven't seen this before, and we did some work and went, we did a resistivity survey. It looks like it's offset the trend by 125 to 150 meters. Let's test that offset to see if it continues like we think it might. So we're not just hoping to find something on Moose Pasture. We're following up hot leads that would be flagship type projects for most of our peer companies.
Right.
And I think that's what separates our portfolio of opportunities. When we sit on opportunities like that on 4 or 5 other projects, we're not even be able to work because we don't have the resources. We're not starting from ground zero, we're starting from a base of something that we know. And our team's expertise isn't so much about I can drill holes, it's how do we play this uranium exploration mid-stage projects to a T.
So give me an example of that, because to me, I've seen so many companies, do the drilling, get a report done, a study done, and expect it to radically change people's perception of the company. Quite frankly, the market doesn't care.
No, and I would agree.
Right?
Right.
So I hear what you're saying, and that's, again, sounds smart use of time and money and using data to make decisions. But I think a lot of companies would claim that. So how do you think? What do you want to tell shareholders about what you're doing about making sure that, one, you're going to be around long enough to see all this out, and how you're going to see a significant bump? What's the thing which gives them a significant bump? Why the market will react?
The only thing we can control is how we execute our portfolio and make a new discovery. That's really what we can do outside the market dynamics. Right. And I'd love to say we're going to move Horseshoe Raven forward today, but it's just not realistic. So all we can do is make discoveries on the portfolio, but looking at that lowest hanging opportunities we have on our tree. Right. So and what we do differently than everybody else is that we're not bound by the models. So if you were an uranium explorationist, there's the classic unconformity model, and and people who know me, because you talk about this forever, and what a lot of people do is follow the model to a T, and no matter what they see, they're going to follow the model. What our team does differently is we say, no, what does the rocks tell us we need to do, and where do we need to go? Right. So for example, that target we're talking about just south of McLean Lake is something that nobody else would do, but we'll do because we've involved in discovery that actually did one of those. When we looked at our Christie Lake project, we had a plan about what we wanted to do starting it, and then we started doing the work on our project at Paul Bay, the Paul Bay deposit, and growing that. We realized something that the previous operator didn't understand. And so, for example, a classic unconformity deposit where the fault structure in graphite comes to the unconformity surface and it forms a trap, and that's where your Cigar Lake and Key Lake deposits are found. And so people will drill the graphite at the unconformity, and it was a mantra. It was almost a religion in the 1980s, 90s, and even in 2000s, and even some companies today. What we realized is that we need to follow the structure, which sometimes is in the graphite and sometimes is not. And not only do we have to follow the structure, we have to be at the bottom of the structure, and that projected somewhere differently than what was drilled in the past. And we went out and drilled where we thought was the right place. We made the Aurora discovery. So we're applying that thinking across the rest of the property. So we let the rocks tell us where to go. We don't let the model tell us where to go.
You're agile thinkers when technically.
Yes.
Okay. So you'll adapt according to what the rocks tell you. I get that. So what are you doing in the market? You're here at WNA. You're meeting a few funds, a few investors. What are you doing other than that? Are you bothered? Or do you think it's like, well, sit back, now's not the right time, we'll see where we are in the new year and we'll talk to the market then?
Always bothered.
Right.
If you're not bothered, then you shouldn't be in the public company, because it should bother you, and it bothers me, and it bothers me every day. Right. But I think when it comes to what we do, we've varied our strategy over the last few years depending upon whether we thought the traction was right or not. We believe now, with interest being a little bit different than it's been in the last couple of years, now it's time to push and hear our story and show people what is different than what our peer companies are doing. We're not a project play per se, we're a portfolio play. So if you want a portfolio play on a bunch of uranium opportunities, then we're one of your best plays. If you want to invest in a project specific thing, I want to see where project A gets to in the next development cycle, then that's where you should be. Okay. What our different is, we're a portfolio of opportunities that includes potential for projects because we have them in the wings.
Gives you optionality. Okay, absolutely. I like that. So I'm going to finish off with something which I talk to CEOs about: remuneration. How do you guys reward yourself in this market where no one's making money because you're not producing? Shares are flat. You've got shareholder money. You've got to prove you're creating value, and it's difficult in this marketplace. So how does your board decide how to pay yourselves or remunerate yourselves?
Well, you'll notice in our group there's been very little changes in terms of salaries for the executive team and the board over the last several years, and that's market related. Our board doesn't believe that in tough times that they should be giving out our company's money, and personally, I have been recommending that we don't. Over the last few years, we do stock options, and that's the primary way we're rewarding people today.
What's that average stock option at?
Probably for board members, you're looking at about anywhere between 300 and 500,000 shares in a given year.
At what
annually
price?
At whatever the market price is at that time.
At that moment in time.
At that moment in time. The same thing for executives. The CEO is getting a little bit more than that, but not much. We're not giving away much. We're trying to keep well below. Well, we have a 10% threshold allowed in North America, in Toronto. We're trying to keep well below that.
Okay.
In the 8 or so range.
Okay, it's all public information.
Yes,
people should have a look. I think it's very telling statistic. You guys
we don't see a lot of salary raises, and in this particular, I wouldn't be counting on salary raises for anybody as well because it's tough times.
No, it's tough times for everyone who's given their money to you. How much money have you put into the company, or how much money has been put into the company? Well, I've been going back a while, haven't you? An unfair question.
My shares are definitely underwater.
Right. Okay.
So I hurt like everybody else at this point in time.
Okay.
I own just a little over around 186,000 shares right now.
Right. Okay.
But I've had to fund that out of salary since I started, so I haven't been given any shares, which is appropriate.
Yeah. Okay. Roger, thanks very much. That's a wonderful first run through. We've not spoken to you or anyone in your company before, so I think our subscribers will get a good sense of what you're about. I like the story. Thanks very much for watching. We hope you enjoyed that. And if you did, please click the button in the corner of the screen to subscribe to our YouTube channel. You can also catch us on our website, cruxinvestor.com, and Cruxcast, our podcast series. Plus, most days you can catch us on LinkedIn and Twitter. We'd love getting your feedback, so please keep that coming, and we'll speak to you again soon.